There's been some breaking news in the Australian property market this week that is huge. Interest rates have started to increase. Yes, you heard that right. One of the largest banks in Australia has just had a large increase in its fixed interest rate offering to Australian consumers. This is big. It's because it now signals a complete change in the reversal of how interest rates were supposed to go. Not too long ago, we produced a video on this very channel saying that fixed rates are coming down.
The last little golden nugget is interest rates with a 4 handle are on the horizon very, very soon.
And it happened. And today, we now have the opposite situation. And this is bigger than Macquarie changing their company and trust lending policy last week. You know why? This impacts everybody. It's now a signal that interest rates will continue to go up, no longer down. That is a big, big change. In this video, I'm going to go through what it means for you and what you can do to prepare for it and whether you should be considering a fixed rate mortgage for yourself too. Let's go. So first of all, this is the big news that came out from Westpac. A little bit of a surprise, but I'm not that surprised it happened after the month that we've had. If you watch this channel, you would have seen a little while ago that I came out and said that inflation data is game changing from last month. The RBA expected at 0.6%. It came in at 1.1%, nearly double what the RBA expected, and maybe even one of the biggest forecasting misses that we've had in a very long time. You know, they had forecasting misses when we had COVID and, they expected 10% unemployment and chaos, and none of that actually happened. And then that was in really uncertain environments. Nobody knew what was going on. But now we've had a period of calm. We can kind of expect what's going to happen. We knew where inflation was heading. Everything was happening on track. But the RBA got this so wrong. So wrong. They expected at 0.6. It's come in near double that. It's changed the expectation of what interest rates will do over the next 12, 18, 24 months. And in the series of videos that we produce next, you're going to get a really clear insight as to what's happening in the Australian property market from this bit of news and what's going to happen in each state from these changes that have just happened in the last month and what it means for the years ahead. So Westpac, the 1 year fixed rate up 0.05%, not very much at all. That's not really a big deal. No one really takes a 1 year fixed rate as well, and not with Westpac. The 2 year fixed rate, what is going to happen to interest rates over the next couple of years? Westpac have come out with a 0.35% increase. If you watch this video right here, about 12 months ago, I came out and said 4.99% interest rates are coming. And everyone looked at me being like, that's a bit crazy, 4.99%, what? I'm paying 6. That has already happened. How do I know it's happened? Because Westpac's at 4.99% as of November 11th. On November 12th, they are now 5.34% because they have increased by 0.35% from that 4.99% that was on offer last week, which is no longer the case anymore. There was also a 3-year increase up 0.1%. It applies to owner-occupier rates. It applies to investment rates. It's just all across the board. They have increased their fixed rates. Let me tell you this. Westpac increasing their fixed rates. You know what's going to happen with CVA, ANZ, Macquarie, Suncorp, ING, everyone. They're about to do the same. If they have interest rates around 4.99%, if they've come down that far, they're going to have to increase their pricing. They're going to have to increase their interest rates and take this offer off the table, because if people start taking it, they're going to be like, uh-oh, we're going to lose money here because interest rates aren't going to go down that much. We thought they would, but they're not going to happen anymore. So they will take it off the table. And this change means that if you are considering a fixed rate, you have about a week, maybe 10 days. You don't have much time to lock in a 4.99% interest rate. I think it's a very interesting question now. should I lock in my interest rate if I've got a 4.99% offering for the next 2 years? I haven't thought this was interesting for a year or two now. Fixed rates, I've really been telling people to go and do it. And if you look at the data, nobody's taking fixed rate mortgages right now. But with the news that has come out now, if your bank is offering you 4.99 and you're paying 5.5, 5.5 plus right now for the next 2 years, and the latest data, and you just want to pick the side that offers you the better price, and it's just a pricing consideration, it's an interesting one. I'm not going to go and tell you right here to go and do it, but it is an interesting question right now, and you might want to think about it, particularly if you don't need an offset account and you just have a really, really basic structure and you just want to, maximize and cheapen your interest rate as much as possible over the next couple of years. 4.99% is pretty good, and if you can get that for the next couple of years, you might want to take it. If I had to guess, I think interest rates in 2 years' time might be a bit lower than that right now, but over the next 2 years, it might take another year before a rate cut comes in. It might take another 6 months. So you're going to get into the 2 year period. You're going to have a large chunk of that 2 year period go on with this interest rate that you have, and you can have a bit of a discount for a period of time. So when you do the math on it, it might make sense to actually consider that fixed rate for you. And if you need help to navigate the current Australian property circumstance and navigate all this information I'm giving to you and work out what you should do, and you need a finance broker, my team at Flint Invest can take care of you. And if you need somebody to go and buy you properties in this everything everywhere property boom that we're in right now and take advantage of this increase in house prices, the team at Alaya are the best in the industry and use the economics and data frameworks that you see all across this channel to make better decisions about which markets are going to do well, when, and why. Okay, so that is what's happened. Now, the most interesting question, which I've kind of already touched on, is why is it happening? It all stems back down to the middle of October. I think it was around the 17th of October when it happened. The inflation data came out, and that's caused a big spin in all the markets around Australia, because it came in so high, and it now has changed the expectation and the pricing of future interest rates. How do I know this? You can see it right here. It's so clear on this chart. This is the 2-year Australian bond. That is the price, the yield that you get as an investor if you go and buy Australian government bonds that last for 2 years. How much of a return are you getting? This is a signal, a proxy for what the interest rate setting is over the next couple of years. If people expect interest rate cuts to happen over the next couple of years, then the price of this comes down, the yield comes down, and it's just like an expectation of what interest rate settings are going to be. You can see this over time. It does move around a little bit, but on October 17, right here, I'm going to circle it in this little video for you. You can see it. There's a big, big increase in pricing, a sharp just gone up like a roller coaster that's going up, 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 up. Oh, it didn't happen very slowly though. It happened very, very quickly over the last few days, and it's stabilized now. And this is really the most interesting part. If you look at this, the price went from 3.25% to 3.6%. Do the math on that. What's the difference between those two, everyone? I'll give you a second to work that out. It's 0.35%. You know what the interest rate increase from Westpac was over 2 years? 0.35%. It is tracking exactly what is happening here. That is a sharp enough movement to mean that they have to adjust their pricing if they believe this price will continue over the period ahead. And they do. They think it's stabilized here. It's not coming back down anytime soon. Otherwise, they wouldn't have changed their pricing. Banks don't like being like, I've increased my pricing. There's all these bad media headlines. I'm sure they're all over the papers today being like, Westpac have increased interest rates. Banks don't like doing that. And then cutting interest rates. They don't just flip-flop, move around every day. They do it when they think it's going to remain, and they have to adjust their settings because they don't want to make a loss, of course. So back to the October 17th big change. Watch this video. Here, I released it as soon as that inflation data came out. I was like, oh, this is big. And now here's the dominoes falling. So there's some inflation data here as well. What you need to know as property buyers. Right now, we're in the middle of the everything, everywhere, everyone property boom. Property investors make up a huge chunk of lending. It is flying at the moment. Check out this scorecard that came out yesterday on investor lending. Absolutely wild right now. First home buyers, they're out there with the government scheme being like, I want a house, I want a house, I want a house. I don't even need much money. The government's gonna back me in. That's happened from the 1st of October too. You have upgraders sitting on lots and lots of wealth at the moment. We are creating over $1 trillion in wealth, and a lot of upgraders are sitting there being like, holy moly, the house I want to live in is going to cost more next year. I got to make it happen now. That is the everyone boom. You have everything. Houses are going up, units are going up, everything's going up, townhouses are going up. That's happening right now. And the everywhere is every single market all across Australia. You've seen my videos, every single one of them on the up right now, and Australian property prices rising at 1.1% in the October month, and every single capital city in most regions as well posting positive numbers right now. That is all creating confidence. People are feeling confident right now about the expectation of house prices. That is driving demand. It's driving what's going to happen next year. I think this will happen at the beginning of 2026. I think you're going to start seeing some real FOMO. Are you going to start seeing probably more in Melbourne and in some markets, in the apartment market in Sydney, in the sub $1.5 million market in Sydney? I think you're going to see those nasty articles where you see queues and queues of people at auctions. You're going to see the mad FOMO. You're going to see people overbidding. You're going to see people fighting for it, being like, I want a house, I want a house, I want a house, as if they don't exist and they can't see them anyway. It's like, this must be it. The mentality of the buyers are about to change. That is happening right now. And you could see that. If you look at this, according to Westpac Melbourne Institute Customer Sentiment Survey. So this is the best customer sentiment, like how do people feel survey. Westpac go out, I think it's every month, and they release numbers on how people feel. They've been doing it for a long, long time. It is the measurement in Australian data for working out how people feel. And expectations for higher mortgage rates jumped 17% in 1 month. So Australian consumers are out there. A lot of them are now expecting interest rates to increase. That October 17th news is starting to spread and people are starting to feel it. So the question that you've got to ask yourself is, with all this FOMO happening and everything everywhere, everyone, property boom happening and the momentum that's happening right now, is this enough to slow the momentum down? Fixed rates increasing, inflation going up, Macquarie Bank pulling trust lending, APRA coming out, ASIC coming out with some noise. You can start seeing it. You can start seeing all the dots that you kind of expect, all the market cycle dots. When things start going really, really well, you can start seeing the curve happens. And it's just like, are we approaching the curve where things start pulling back a little bit? You can start feeling it a bit with all the changes that are happening. Some of them are negative, and I think it's only going to accelerate over the course of the next 6 months, where the regulators come in and be like, hey, we need to make some changes here. The RBA is going to stop talking about interest rate cuts, and they're going to be like, hang on, maybe you got to think about interest rate increases, everyone. Maybe you got to think about that. I don't think they're going to do that. I don't think that's realistic because unemployment's going up. Another video on that. But I do think they will change their communication. That's going to really change the way people feel and behave to try and slow down that confidence and be like, please, everyone, calm your farm. This $1 trillion boom, we don't need house prices to go to the moon again because it creates all sorts of problems. And we just need some sort of sustainable growth that's happening in the housing market, just normality. Not this everything, everywhere, everyone boom where things are just going nutso. They may want to calm it down. And ASIC and APRA, our lending regulator, they may intervene here too. So that's a little bit of an anecdote for 2026. I don't think that's happening anytime soon, but I think I'm going to be having conversations on our podcast and with you all about this too. So there you have it. For the first time in 2 years, interest rates are back on the rise. Fixed rates are on the rise. Major banks are starting to make their moves, and this has the potential to change things up a little bit in the property market over the years ahead, but not enough to slow the momentum down. The steam train that is the Australian property market right now. We are in the middle of this boom. It's going to continue, but this is a signal for you to think about. And if you're a borrower out there with the right set of circumstance, you might want to think about it. Should I be taking that fixed rate? It's a question to ask yourself right now.